Most people will spend their entire working life trading time for money. Work more, earn more. Stop working, stop earning. But there's another way, and it's been hiding in plain sight. Welcome to Nuts and Bolts Investing. For the last 10 years, I've been investing in the stock market. Not as a professional, not as someone with a finance degree, as an ordinary person who decided to figure this out, and whose life looks completely different because of it. This channel exists because when I started, nobody was explaining this stuff in plain English. Every resource I found was either too complex, too vague, or aimed at people who already knew what they were doing. So this is the channel I wish I'd found when I first started looking for answers. We're going to focus on stock market investing because out of everything you can put your money into, it's one of the most accessible, most powerful, and most proven paths to building long-term wealth. You don't need thousands to start. You don't need a broker in a suit. You just need the right knowledge. And that's exactly what Nuts and Bolts is here to give you. No jargon and no overwhelming data. Just the fundamentals broken down simply. So you can start making your money work for you. Now is the time to kickstart your investing journey. Look, unfortunately, most people will never build real wealth. Not because they don't earn enough, not because they are bad with money, but because nobody ever showed them how. Right now, your money sitting in a savings account or current account is quietly losing value to inflation every single year without you doing anything wrong. But there is a better way, and it's simpler than you think. In the next 8 minutes, I'm going to show you exactly what investing is, why it matters, and the key steps to getting started, even if you have never invested a penny in your life. So here's the honest truth about saving. Savings accounts are safe. They're great for an emergency fund, but as a long-term wealth building tool, they fall short. Over the last decade, inflation has regularly outpaced what savings accounts pay in interest, which means in real terms, the purchasing power of your saved money has been going backwards. Investing is how you get ahead of that. Investing simply means putting your money into something that has the potential to grow in value over time, instead of your money just sitting still. It's working, growing, and compounding. And speaking of compounding, this is the concept that changes everything. When your investment grows, those gains get reinvested, and then those gains grow, and so on. Over time, this creates a snowball effect that most people massively underestimate. Investing just $200 a month over 30 years at a historical average return could grow to over $272,000, and you'd have only put in $72,000 of your own money. The rest? Compound growth. That's not magic, that's maths. And it rewards one thing above everything else: just starting. So what do you put your money into? There are a few key options worth knowing, and I want to give you a clear picture here without it being overwhelming. Stocks are shares of ownership in a company. When the company grows, so does your investment. Simple concept. But picking individual stocks is risky, even for professionals. For most beginners, the answer is ETFs, exchange traded funds. An ETF is one single investment that holds hundreds, sometimes thousands, of different companies inside it. Instead of betting on one company, you're spreading your money across the whole market in one click. Lower risk, lower cost, incredibly simple. This is where most people could start, and honestly, where most people should stay. And for clarity, I'd just like to add here, I'm not a financial advisor. This content is for educational purposes only. It's not financial advice. Always do your own research or speak to a qualified professional before making investment decisions. So you may also hear about bonds, lower risk loans to governments or companies that pay interest, and dividends, regular cash payments that some companies make to shareholders. Both are worth understanding. Both are covered in depth in the full beginner video course I put together. The link is in the description if you are interested in learning more. But for day one, ETFs are your focus. Here's the parts most videos skip over. Step 1. Know your goal. Are you investing for retirement in 30 years? A house deposit in 5 years? Financial freedom? Your goal shapes everything. How much risk you take, where you invest, and how long you leave it. Before you invest £1, know what you're investing for. Step 2. Use an ISA. If you're in the UK, this is non-negotiable. A stocks and shares ISA is a tax-free investment account. Any growth, any profits, any dividends inside it are completely free from UK tax. The government gives every adult an annual allowance. Over decades of investing, the tax savings alone can be worth tens of thousands of pounds. It costs you nothing to use one. There is no reason not to. Step 3. Pick a beginner-friendly platform. In the UK, there are some really solid starting options which are covered under the Financial Services Compensation Scheme, simply meaning your money is backed up by this scheme, currently up to £120,000 per person, should the bank, building society or credit union go bust. All beginner friendly, all covered in detail in my other videos. This includes a recorded screen shared demo of opening an ISA and making your first investment from scratch using one of these platforms. Step 4. Invest consistently, not perfectly. Set up a monthly amount, even £10, and automate it. This strategy is often called dollar cost averaging or pound cost averaging, and it's one of the most powerful and stress-free approaches a beginner can take. You invest every month, regardless of whether markets are up or down. Over time, it smooths everything out. You don't need to time the stock market. You just need to be in it. I want to leave you with the most important mindset shift. Markets go up and markets go down, sometimes dramatically. When that happens, and it will happen, every instinct will tell you to sell, to get out, to protect yourself. Don't. Every market crash in history has been followed by a recovery. Every single one. The investors who lost money permanently were the ones who panicked and sold at the bottom. Your job as a long-term investor is simple. Stay in. Keep investing. Trust the process. The market rewards patience more than it rewards intelligence. Now, everything I've covered today is the overview, the big picture, the foundations. But if you want to go from understanding the basics to actually investing with confidence, like and subscribe to catch my other videos. And if you really want to get the full absolute beginners, self-led, no-nonsense guide on stock market investing all at once, check out the complete UK Beginner's Guide to Investing on the website. Inside that, you will find specific videos on the following topics and much, much more. Short, no-nonsense videos, breaking down the terminology, specifically for beginners or those who want to learn more. Setting out a clear path from where you are now to your first investment and beyond. The link is in the description below, or visit a website at nutsandboltsinvesting.com. And there are also free resources available on the site. If you found this video useful, consider following along. I'll be regularly breaking down a new investing topic in plain English. Whether you're just starting out or building your knowledge, this channel is built for you. Perhaps drop a comment in the comments section with what you would like to learn, or start by answering this question. What's the one thing about investing that's always confused you? I try to read every comment, and your questions shape future videos. So thanks for watching, and I'll see you in the next one.